Well, it was very interesting, mainly because there were two former regulators there and one existing regulator, and then some private bankers. And they gave a very good snapshot, I thought, of what is happening in the region at the pit face. Some of them in some very difficult and suffering countries. I mean, Oleg Vyugin of MDM Bank gave us a snapshot of Russia and what's happening there, consolidation. He's just about to merge with another big bank. And then the Central European countries have their own particular problem, liquidity problem, involving not only Central Europe, but actually Western Europe as well. That is that if liquidity is not maintained in Eastern Europe, Western European exporters and the banks there will suffer too. Many of the banks have operations, subsidiaries in these countries of operation. And there has to be, and this is what came out in the panel, there has to be a lot of coordination between central banks, governments, and the banks which operate across borders in all those countries. There are some positives. I mean, Central and Eastern Europe, on paper, looks as though it is suffering far more than Asian countries or Latin American countries. And that's true in terms of the fall-off in GDP and prospects for growth in the next couple of years. But Herbert Steppich of Raiffeisen International Bank, I think, reflected some views of others in saying that when the region does start recovering, it has a fantastic potential. If only the banks that had kept war chests for acquisition still had those war chests, of course, they could clean up now because assets are cheap. There are a lot of banks with a lot of valuable operations which are suffering and could be bought. Unfortunately, these banks don't have the war chests necessary because they've spent it all on their own problems, non-performing loans and the like. So what we might see is entities outside the banking system, such as funds, big investment funds, buying up banking assets in these countries. That would change the landscape completely. So we're in for a very interesting time.